Good morning, traders. So let's start the market analysis with the US dollar index. The index initially dropped to its lowest level since 2022 before recovering to 96.95 on Wednesday, as markets digest the latest FOMC decision. The Fed delivered its first rate cut of the year, reducing the funds rate by 25 basis points. And policymakers also signaled another 50 basis points of cuts before year end, which is a slightly more dovish stance than expected back in June. However, Chairman Powell emphasized this was a risk management cut rather than the start of a major easing cycle, noting that inflation risks have diminished since April. And from a technical perspective, the key support zone sits between 96.38 and 96.55. A stabilization here could trigger a rebound back towards 97 or higher. But the failure to hold this range opens downside potential to 96 and then 95.5, with 95 not far below. Momentum indicators remain weak. The MACD shows growing selling pressure, and RSI hovers around 37, still above oversold but firmly bearish. Resistance remains at 97, 97.58, and the 9-day moving average 98 as a psychological ceiling. Moving on to WTI crude oil. The prices slipped to $63.65 a barrel, ending a 3-day rally. The market reacted to reports of potential disruptions to Russian exports after Ukrainian drone strikes, though Russia's Transneft later dismissed these claims. At the same time, Europe reiterated its plan to scale back reliance on Russian energy. And the Fed's rate cut also plays into the oil outlook, as looser policy can support demand. And technically, oil remains constructive. Earlier this week, WTI broke above the 20-day moving average at 63.42 and climbed to a 2-week high of 64.4, and also surpassing the 100-day average at 64.14. A decisive move above these levels could target 65.61 and also at 66.72. And now the support is seen near 63 and 62.8. Turning to gold. After hitting a record high of 37.05, spot gold eased to 36.60 on Wednesday. The Fed's rate cut supported bullion's strong year-to-date performance, already up more than 40%, driven by central bank demand and safe haven flows. And Powell's cautious tone signals that the policy is still data dependent. And technically, 3700 remains the key battleground. A break above would confirm a new revaluation cycle with upside targets at 37.12, 37.34, and even 37.50. And on the downside, support rests at 36.43 and 36.39. And finally, let's look at the Australian dollar. The Aussie dollar traded around 0.6660 on Wednesday, close to its highest level since November. The Fed's dovish tilt has weighed on the US dollar, while investors now look into Australia's job report for confirmation of the RBA's policy outlook. Markets expect around 20 to 25,000 new jobs, with unemployment rate steady at 4.2%. And technically, Australian dollar remains in an uptrend. The pair is trading above its 9-day moving average at 0.6632, and the short-term momentum remains strong. The resistance now is at 0.6689 and 67, and support lies at 0.6632 and 0.66. So to wrap up for today, the Fed's cut has injected volatility across the board, a dollar weakness, a stronger gold, resilient oil, and a firmer Australian dollar. So that's all for today's morning review. Thank you for watching.